What's up, ladies and gents? It's a boy Max back at it with another one. Right? On today's video, let's keep it real short and simple and straight to the point. I got a forex forecast for you guys, right? So basically, what we're gonna do today, I'm gonna show you what I have on my list, and then I'm not necessarily gonna give you signals, but I'm rather gonna explain what's where the phases at which these markets are and what's most likely to happen and stuff like that, because you gotta do your own preparations and stuff. So I can only assist. Today I'm only assisting with the thing, with looking at the overall direction of where these charts are going and stuff like that. Then you guys will know what to do in terms of when to execute and stuff like that. Alright, so I hope everybody's good. I've been good. I dropped a couple of videos in the past week. I'm gonna link them in the description box below if you missed them. And I know most of you will find the videos helpful to some degree. So even if the video is helpful to only one person, that's good enough for me. So for that reason, I'm gonna put it in the description box below. Check out the links, man. And yeah, let's go to the analysis. So right off the bat, you can see we're looking at the Euro USD daily, and with this one, guys, for this week I'm most likely gonna be looking to buy there. All right, and I just want to run you through the process of why I'm saying I'm looking to buy here only. All right, so if we take you to the weekly time frame, you will see that we have this trend line we drew at the bottom of the price action. But the thing is, there's also another thing. There's also room for us to draw a trend line also at the top of this price action here. So it's gonna look more like a descending channel. And let's just do it. So the trend line is gonna start there, and then we're just gonna move it to the current price. Right? Like so. And then we're gonna go to the daily time frame, and then we wanna see if everything is aligned correctly, which it is right now. And if you zoom out a bit, you will see that all of this price action movement that has been happening there was happening in between these two trend lines, which makes up for a descending channel, right? So previously we had room for a lot of trades, and we saw this because the thing was going up. The price action was going up, right? So as it was going up from this point, basically, right? Because we first made contact with the bottom trend line here, and then it kind of went up, but it still made a lower high. So there was still momentum to push the price down. And here we kind of got a fake out. And if you're not familiar with fake outs, you wanna tune in tomorrow. I'm dropping a video on candlestick closes, which is gonna explain what a fake out is and more about that later. But yeah, we had a fake out here, which means for all the people who wanted to catch this wave sooner, this was only a fake out, which resulted in losses for them. And then we closed above the trend line again, and then that's when we picked up momentum. And then from that point onwards, we're waiting to see if the price is gonna get to the top trend line and rebound there and come back down, or alternatively we can have a reversal line. And with the reversal line, we know that as soon as a candlestick closes on the outside of this line, meaning below this line in this case, we know that chances are, the odds are in our favor. So there will be a nice opportunity to sell. And that only happened there, which was on the 21st of January. That's when it happened. And this pair has been short selling ever since then. All right. So we're together on that part. But now the thing is, looking at this pair now, we're at the bottom trend line. So as we are in the bottom trend line, you know that most likely we are gonna see a rebound and price start to go higher and higher and higher. So the only way we can prepare for this is to look at our key resistance and support zones maybe and stuff like that, and I'm already seeing this area here. It's 1, 2, 3. So if we can have a support resistance zone there, right? Because we might see some action there, and in case also we go long. So when would be the right time to go long, you might ask? So now if we go to the H4, because we wanna see what's happening, most likely I'm gonna wait for this pair to for the price to go down a bit, and if I see some bearish action, then I'm gonna open a buy stop at the peak or just before the candlesticks I'm describing to you guys. So it would be the case whereby if this pair starts going down and I open an order just at the peak, then as it picks up, then my trade would execute there, and then I'll just run with it and see what happens when we get, or if it gets at the support and resistance zones and all that kind of stuff. And also we have another resistance zone that I'm seeing right now, a support zone, support turned resistance now, which was here. And if you don't understand why I'm drawing this, is because we previously had support there, which now is acting as a resistance. So I just want to see what happens there first, and then I want to see the price drop, and then I'll open I'll open an order, because remember, we always buy on a higher low and sell at a lower high. So no matter, regardless of the setup, we or the market structure, we always look for those cues in the H4 time frame. All right, so that's it for the Euro USD. I think we can move to the next one. So let's talk about gold, guys. So with gold, I did drop some analysis back in January when basically gold was being murdered and chowed. And what had happened with that was, if we go to the H4, we will see that the trades that were open, basically it was around this area here, right? And this was after a very long impulse movement, meaning there was so much momentum as the price picked up there. So if the price pushes, at some point it's gonna get exhausted, and then that's when you're gonna see a consolidation and stuff like that. And basically what was happening here all along at this phase here, I'm gonna mark it with a box. What's been happening basically at this zone, the price wasn't going up, it wasn't going down, it was moving sideways. And so you know that the price was just exhausted. And then after that, that's when we saw a retest of the support support turned resistance zone. It's basically a resistance turned support zone, because if we go to the daily, you will see that it's only a resistance because that's the peak that we previously had, and then the price came and reacted here, and we only got our retest here, and it's been bullish ever since. So here I'm not really looking for any trades. I'm just catching up with it. I'm not really looking for any trades, although if I do see a very nice higher low, then I might buy into it, but I'm not really counting on it the way it's been moving, so that's it about gold. There's not much to see here. Let's just move to the next one. So what I got for you guys here is the USD CAD. So with the USD CAD, basically we have a trend line here. All right, so this pair basically is moving in a form of a downtrend. It's not a very steep or inclined thing, a downtrend, but basically from what we're looking at, we can't draw our trend line starting there at the top, because then we don't have a very good structure to draw our downtrend line. But if we take the second high, because this is our first high, if we take the second high and the third high and make them 1 and 2 and draw a trend line from there, then we have a way better trend line than what we had when we draw using the first high and the second high. So this is our first and second, so we just align it to the current price like that, right? And then that's when you see that this is, you know, a nice it's a tradable downtrend. It's not really the best downtrend, but it does the trick, right? So what we're looking at here basically is, it's more, this one is more of a trend that would use reversal lines and trend lines to execute our trades. Because if you check out what happened here when we had this line, or rather let me use a white line. So what happened when we had this reversal line here? As soon as the price broke it, all right, it rallies up back to the trend line, right? And alternatively also, for this move here, if we had a trend line starting from the low to the high, as soon as it breaks, as soon as we have a close outside of that reversal line, the price basically, it sells out, right? And you see consistent momentum on that side, downwards, that is, right? And if we just keep using this line, that's what you'll see. Like as soon as we have a close outside of this reversal line, the price has to rally up back there, right? And then so now this is where we at. So with where we at now, if we just draw a reversal line from below and have it like this, then we can clearly see that with the USD CAD, we haven't closed outside of that reversal line, and but when we do, we're basically gonna like keep doing what we've been doing ever since like the start of this trend. And I think I don't have to explain it any further. I think you guys get the picture. So basically the idea is, wherever you enter into this market, because this is a daily chart, this thing, if it like continues with the trend that it's been having, we're gonna see this thing move for quite some time, right? Like it's a lot of pips. So what you're gonna do is you're gonna wanna keep moving, or use a trailing stop loss. Keep moving your stop loss lower and lower and lower as you go deeper and deeper into profits. And don't really rush into like don't really rush this. If we execute this trade, don't rush the thing. Don't rush your TP, in the sense that like, don't be so quick to close out the trade. Hence I'm saying you should use the SL as a method to trade your trade. You understand what I'm saying? Alright, man. I think I have one last pair for you guys, because remember I said I don't want to keep this too long. I just want to brief you guys before we enter into this week. So let's check this one out, and yeah. Alright, fam. I got USD ZAR for you guys now, right? So with the USD ZAR, what I've already done before is I basically looked at a key resistance and support zone, which is why we have this line that we have here, right? And if you can see, we also have a lower trend line. We have a trend line at the bottom, which is joined by 1 and 2 here, right? Because it's looking at basically the bigger picture of this trend. Understand what I'm saying? So the reason why I used this two the reason why I use these two lows for the trend line is basically, if I used 1 and 2, it would cut through the thing. It will cut through the chart, right? And if I use 2 and 3, basically it wasn't gonna be aligned with what's going on there, with what's going on here at the far right. So the trend line will be very far from the candlesticks, that there wouldn't be any use for us to have it. So by using 3 and 4, 3 being this one and 4 being this one, as our points of drawing this trend line, now we can, like, it's not very far from what we're trying to achieve and look at. So it's relevant to the price action that's going on right now. So here's how I'm saying this is relevant. So I've been following the USD ZAR for some time, right? I've been following the USD ZAR for some time, and at some point I drew this trend line like this. All right, drew a trend line like this, and then if you can see, just after this point, the price started to move further from that, from the price thing, from the trend line, I meant to say. So the price started to move further away from the thing, from the trend line. So instead of using 1 and 2, we had 2 and 3, and this is how it looked. All right, so we had 2 joined with 3, and then our trend line was like this. Now we had a main trend line and a sub trend line. And then I'm gonna talk more about this on a whole nother video, because I don't want to make this too long, and I'm already making it too long by repeating that I don't want to make this long. But hey man, it is what it is. So basically, with this second trend line now, we knew that every time it bounced, the price bounces from here, it's basically gonna continue with the trend, of which it did when it went and came back down here to this trend line. And then we know, because of how price action works, chances are this rejected. Chances were this was gonna reject. So we saw the rejection signs. Then this basically went back to the retest zone, right? Retest zone, and then we kind of like pulled back a little bit, and then we broke out. So when you break out, this is the part where I want you to pay attention now. As we break out now, right? The price now, we know that as we're breaking out, we broke the sub-trend line. So now we have to go back to the main trend line. So that main trend line that we had drawn, we just align it to the current price, and this is what we get left with. So this we can delete. The sub-trend line we can delete now. And then now we just have this price action that's in between, a clean price action between a higher trend line and the bottom trend line, right? So how are we gonna trade this? Already we seeing a rejection, so like already that's a signal to like enter into this market. But if you like wanna wait a bit or like play it safe, you would have to have this line that's gonna act as a reversal line, right? And as soon as like a candlestick closes on the other side, meaning just below here, below this reversal line, that's when you're gonna enter. But like for the professional traders out there, you already know like a rejection when you see it. So you might as well just go to the H4 and wait for a lower high. Go to the H4, wait for a lower high, and sell into strength, and that's it. That's all I have for you guys. And if you're seeing the sell stop that I have there, this was because as this price action like spiked out, rejected to like break out, chances were it was like this was gonna be a lower high, which it was comparing to the previous one. But just to be safe, I had a sell stop, right? Because I don't want to make like rash decisions and find myself in a market that isn't the best. So by having a sell stop, I was able to avoid this L that I would have taken. And then this thing, I'll probably just close it out tomorrow, because I can't close it now when the market is closed. So that's all I have for you guys. Thank you for listening to me for all these minutes. And if you still listening to me, you're awesome. Wishing you a week filled with prosperity, success, and wealth and health, of course, my man. And if you still around, just comment wealth and prosperity in the comment section, just to keep that energy going. And let's keep it contagious just like that. Appreciate you guys for watching. I'll see you on the next one. Peace out.